As we inch toward 2024, investors are betting on whether or not we'll see a Santa Claus rally and how the markets will perform amid uncertainty about the economy. Let's get to some thoughts from a portfolio manager. Joining me is Paul Harris, partner and portfolio manager at Harris Douglas Asset Management. Paul, thanks a lot for joining us. Always great to touch base with you. I guess we really have seen that so-called Santa Claus rally that people were wondering about in the fall. What do you make of this rally that we've seen since the end of October? It's been, of course, amplified by the Fed's most recent comments.
Yeah, so I think that the reality is that, interest rates are either stabilizing or they may go down next year, who knows? But I think they're stabilizing, and that's really kind of the important part of all this stuff, right? So, and there's a normalization to interest rates, which is very important. So I think that what you have to understand is higher rates are, we need to normalize rates because rates were very low for many years, and now we're normalizing them. And that gives investors a lot of options, right? So years ago, you would get 50 basis points on a GIC. Now you can get 4 or 5%. So that allows people who are very risk averse to actually invest their money very differently. And then people who want to take on more risk, whether through the fixed income markets or to the equity markets, can do that, right? So I think that those things are really important. I do believe, though, that we do need to make sure that inflation does come down to the 2% level. It's very important. Like the Bank of Canada governor just said, previous to when I came on, is that it really is better for Canadians and consumers that inflation gets down to those levels, right? It may be difficult to do that over the next little while, but I think that that's the important part, that we bring that kind of price stability back into the economy, and that will help economic growth. It'll also help consumers. It'll help, other aspects of our economy.
We seem to have spun on a dime in terms of investor sentiment from doom and gloom over higher for longer to euphoria over interest rates plunging by 75 to 150 basis points through 2024. What do you think?
Well, I certainly think that rates may come down in the later half, but I think that rates will, the Federal Reserve, the Bank of Canada, the ECB, all these places have a requirement to bring down inflation. I think so. That is their priority still. They may not increase rates anymore, but they're certainly probably not going to bring down rates as quickly. I think there are two issues that are important. One is this kind of interest rate inflation issue, and hopefully we get to those levels. I think for the U.S. economy, obviously, and the global economy, we're going to be in a presidential cycle in the United States, which could add volatility to the stock market. But overall, I think that we're probably going to be higher down the road than lower. I think that because of the stabilization of interest rate, that makes decision making from companies a lot easier, where you couldn't do that in 2023 and in 2022. The volatility in interest rates didn't help those things. But I think that in this case, it will help companies make better decisions. And you may see rates lower, if we if the economy reacts properly and the Federal Reserve and all these other central banks decide that rates can go down a little bit. I think that people are sort of too aggressive on when it's going to happen. But I think that, I think in the latter part of 2024, you may see lower rates. I think this issue of a recession, we may go into a slower growth environment, and I think that that's a possibility, but it's not going to be a deep recession, I don't think, given what we've seen over the last little while and the economic numbers. But I do think we may get slower growth, which may hit kind of company earnings a little bit. But I think that there's still the opportunity to buy great businesses, I think, at reasonable valuations. And I think that that's what people should be doing.
Okay, you like, in terms of sectors, large cap technology, healthcare, and banks in both Canada and the U.S. Let's talk about some of your stock picks. TD Bank, speaking of banks in Canada, you like this one?
Yeah, so I've held TD Bank for a long time. I think they've had a very difficult year. I think they've, not only with their Horizon deal, pulling back from that, they've also had some issues on the side of some legal issues about of how they're managing their businesses. So I think that those things will all kind of come to fruition over the next couple of quarters. I think they've given you kind of poor guidance for the next year, which I think they may be able to beat. But I think TD Bank has a great franchise in this country and has a very solid franchise in the United States, which they can kind of grow. And they're the best capitalized bank, and they have lots of capital. There's no issues with that. I think the Cowen deal, maybe, you have to see how that comes to fruition over the next little while, where they can cut the cost structure down and all those other things. I mean, it's always difficult buying an investment bank because it's they don't necessarily mesh very easily for a period of time. So I think that's what you have to watch for there. But I think TD Bank at these levels and the dividend yield gives you an opportunity to buy I think a very great institution in this country for relatively cheap.
In terms of large cap tech, you like one of the most familiar names in that sector, Microsoft.
Yeah, so there's a couple of, I think Microsoft has the ability to really benefit from AI. I think all companies will benefit from AI, right? Microsoft clearly has the ability to do that. I think they're way ahead of most of their competitors on that side. I think that they can achieve better revenue growth from it as well, which I think is a big issue. Like, how does AI help you, right? And how does AI help you grow revenues? And I think in some companies it won't be able to do that. It'll increase productivity. But with Microsoft, you can see from their productivity products and all these in the cloud, they can actually help companies. And I think you'll see a greater increase in revenue from them on that side. The other one, obviously, I like is Checkpoint, which is another company that does security. And I think there's a huge benefit from that, especially over the last several years when you've seen so many companies being hacked into and stuff like that. So I think cybersecurity is a big area that'll grow very rapidly. It's the U.S. government has invested a lot in that, and so has other governments. So I think as a general thing, cybersecurity is a place that I think has a good secular growth over the next several years.
Let's talk about Amazon before we run out of time. Another one of your picks.
Yeah, I mean, listen, I don't know about you, Paul, but I mean, I don't really go to stores anymore. I just order online. So I think that it's not going away. It's one of the big, it's got great scale. It's got great logistics. You could have bought the stock very cheaply in the beginning of last year. I think that they did a lot of things during 2022 that, brought down their cost structure. I think people were going, oh, they're not, they're the biggest cloud producer in relative, much ahead of Microsoft, but they're the two big players in cloud. And so I think there's lots of room for it to grow there. I think the e-commerce side, their advertising side has become a massive business in the last little while. So I think there's a lot of good things about it that they have, and they have a big advantage over other players in the market. So I think that they can really do well, and owning the company will benefit you over the next several years.